But what I'm going to do is a brief presentation on business finance options post-COVID. A little bit about the government loan schemes, the bounce back loan and Sybil's loan scheme, a little bit about the recovery loan scheme, which is the successor to those schemes as well. Some of you may have heard about that. I'll cover that a little bit. So first of all, that's obviously me, James Blackall, JB Commercial Finance. I don't want any piss taking of my PowerPoint skills either. It's not a speciality of mine. I am a finance guy, not a designer, Mark Costa. Okay, so right. So business finance options post COVID. Right. So a bit of a recap of the current loan schemes. So most you'll be aware of the bounce back loan scheme, which is the smaller end of the marketplace. It came out last May the 4th last year. Finished on the 31st of March this year, along the other schemes. Bounce back loan, very much the small end of the marketplace. £2,000 to £50,000 you could borrow. The Sybil's loan scheme was £50,000 to £5 million, and the large Sybil's loan scheme was £5 million and above. They all ended on the 31st of March. Now, the figures we have on these are only up till the end of March. Believe it or not, these loans are still filtering through the system now. I actually drew down on a Sybil's loan last week because the backlog is so great, but you can't apply for it anymore. You can't apply for any top-ups anymore. And the figures we have at the end of March, so there'll be another big chunk of this at the end, but we can only work with what we've got. And so far, between the three schemes, over £75 billion has been released through them. The biggest of that is via the bounce back loan scheme. 1.5 million UK businesses have access to bounce back loan scheme, which is phenomenal. As you're probably aware, there's government liability attached to these. 100% of the bounce back loans are underwritten by the government and 80% of the others. So the government liability at the moment is approximately £65 billion. Our potential losses estimated between 15 and 20 billion at the moment, based on the research that's been done. So while they've kept businesses going, there's potentially a large government loss on these down the line. And whether that's a good thing or not, well, you can be the judge of that. So the recovery loan scheme was announced at the budget by Rishi Sunak in March and launched on the 6th of April, initially running until the end of this year. I've got the link there. I can send these slides to anyone who cares, to the British Business Bank, where full details are there. And I'll go through the key differences in a second. But the question I get asked more than anything else about this particular loan scheme is, can I apply for it if I've got one of the other loans? Because you couldn't have a bounce back loan and a Sybil's loan at the same time. You can only have one of them. And the answer is yes. If you've got a bounce back loan, there's nothing to stop you still applying for the recovery loan scheme, albeit any repayments on the bounce back loan are taken into consideration when looking at the affordability of the recovery loan scheme. So the key differences, and it's difficult to go through these in a few minutes, as you can appreciate, but I'll do my best. This covers 4 products: business loans, asset finance, invoice discounting, which is raising money against outstanding invoices, and overdraft facilities. For loans and asset finance, it's up to 6 years, and for the other 2, it's 3 years. But the big differences really are the fact that the fees and interest are payable immediately with this loan facility. With the bounce back loan, you had 12 months where you didn't have to make any repayments, and there were no upfront fees. There are with this one. The turnover restrictions aren't in place as they were for the other loans. If you may remember, for the bounce back loan and the Sybil's loan, you could only borrow 25% of the turnover of your business. That doesn't apply here, but there are much more stringent credit checks and underwriting assessments. So rather than being a self-assessment process as the bounce back loan was, this is done fully underwritten like a traditional bank facility. So it is considerably harder to obtain than the previous bounce back loan facility. And we've seen that so far in performance of the loan, which also feeds into the fact that there is a much more restricted panel of lenders. Now, the Sybil's loan scheme by the end had over 100 lenders on the panel. This has currently got 24 as of a couple of days ago. Like I said, I put this together last minute, so I think it's still 24. But there are new lenders being added all the time, and I fully anticipate there being around about the same sort of level as Sybil's by the end, so much more coming on board. So, for instance, someone like the Funding Circle have just been accredited to do this loan, but they couldn't become accredited to do this until they cleared off their backlog of Sybil's loans, which they've only managed to do, and their final day for that is this Friday. So they've got to get rid of one before they can start the other. So I think it'll go up and up. And I think that's probably the reason why there's been so many teething difficulties with this particular product, because a lot of lenders aren't actually able to offer the facilities as yet. So,
quick question, James. What's EFG?
Oh, the Enterprise Finance Guarantee Scheme. It's a scheme that's been around for about 10 years. I'm glad you're paying attention, Mark. It's a scheme that's been around 10 years. It's a government loan scheme where if you couldn't borrow money conventionally against existing security with the bank, the government could step in and help with that. In all honesty, that was there in case anyone in finance here sort of understood that, but I wouldn't get too hung up on it. But if you want to talk about the EFG scheme, my door is always open, I can assure you.
No, you're fine, don't worry.
I know, I can guess that. So other options you may have outside this scheme. So pay as you grow through the bounce back loan. I'll get to that in a minute. That's really important. The commercial mortgage marketplace, as I mentioned in my 45 seconds, is still quite buoyant. So there's still lots of options there. And I believe there'll be an increase in the use of factoring and invoice discounting. So the way you'd use that facility is if you had a debtor book outstanding, so if you owed, let's just say £100,000 by your customers and your payment terms were, let's just say 60 days, you're thinking, crikey, I've got all this money outstanding to me and I need to pay my staff, my bills. You can raise money against that. And I think there'll be more and more use of that over the upcoming 2 or 3 years. And there are new banks, believe it or not. We've 4 new banks launched this year, and they're all offering something a little bit different. So I think there'll be more options available for clients going forward, which is really positive. But I do want to touch upon the pay-as-you-grow option. So this is for anyone who's got a bounce-back loan, which is probably people in this room. Because lockdown has gone on considerably longer than first anticipated when this scheme was launched, the government have had to do something, because the first bounce back loan payments were due in June, because they were taken out in March. And of course, a lot of businesses haven't even reopened, or certainly haven't reopened fully to the point where they can afford several £100s a month in loan repayments. So the pay-as-you-grow options are as follows. So anyone who's got a bounce back loan should have received some correspondence from their bank about this. If you haven't, contact your bank who provided you with the bounce back loan and ask them what your options are. So you've got a few options under this scheme. And you can take any of these with no credit underwriting or anything like that, or credit check. So they're all completely in your hands. You can take another 6 months of repayment and interest break. So you don't have to make any more repayments for 6 months if you don't want to on your loan. Or alternatively, you can take 6-month interest only break. Now, for put that in real terms, if you took out the full £50,000 over 5 years on a bounce back loan, your loan repayments are around about 880 quid a month, I think. The interest only would be about, I think it's about 120 odd quid. So it would reduce your payments to 120 odd pounds. Obviously, you can clear your loan with no penalty if you've got the money in the bank. You can also extend your loan term to 10 years, which almost halves your repayments. Not quite, because the interest, but you can stretch your term and you've still got the ability to pay it off early if you want. So if your initial payment, you're thinking that's going to be a real stretch, you can stretch it to 10 years. And you also can use a couple of these together. So you can take a 6-month repayment holiday and then extend it to 10 years as well if you want. And the interest only option you can use 3 times throughout your loan period. So if you ever come across hard times, you can still use it up to 3 times. But please do be aware, and I put this little caveat in the bottom, that all these options will lead to a little bit of extra interest being paid over the term of the loan. So if you take the term over 10 years, you're going to double the amount of interest you pay, albeit with an interest rate of 2.5%, which the bounce back loan is still significantly lower than any other commercial loan in the marketplace. So I strongly recommend anyone actually looks at these options if you're not sure you're going to be able to afford your first bounce back loan payment. They're very, very generous. Any other questions on that, feel free to get in touch or watch some of my old videos on it. And that's everything. I wanted to whiz through that. It's a bit of a whistle-stop tour, to be perfectly honest, but in 10 minutes, I guess that's the point. So if anyone's got any questions, please feel free to ask away.